Yo, what is good, guys? It's your boy VGOK here. I hope you're all doing amazing and are trading safely in the markets. Now, today, what I've got for you guys is another US30 case study, which was executed on 10th of May and it achieved a 1 to 39 risk to reward ratio. Now, this particular trade, it was a buy scenario within an uptrend, so it was pro trend, and it was one that followed similar or same analysis as a lot of my previous case studies I've covered in a lot of my previous videos. Now, I would definitely encourage you guys to go over all of the videos in detail to really understand the analysis, and not just the analysis but also my thought process as well that I have in these trades, so you guys can also learn how to capitalize with these larger risk to reward ratios. So jumping into the screenshots before we get into the actual analysis of the trade, what we can see here on the screen now is the before screenshot of the trade. And we can see that I based my entry off of this last 1 minute institutional candle over here, with my entry at the open of that candle, or just slightly above the entry, as you can see there, and the stop loss just below the wick of that institutional candle there, and then the TPs I'll be going over in a second. So that was the before, and then the after we have right here as well. So the 1 minute institutional candle I was talking about was within here, right in here, having the entry there and stop loss just below, and we can see the movement away from our entry. So here we can see the intraday movement on that Monday, on that 10th of May. And we can see the actual trade that was taken, which was entry around this point here, just before that 1 p.m. time. And I'm actually just going to jump into replay mode so we can see how the analysis came about. So as we can see on the 5 minute time frame here, what we can actually see is a potential demand zone, over here. And if we look on the 15 minute, it can be seen as a very nice looking imbalance fill. And we can see, that 5 minute base, which looks like an actual candle as the base. On the 15 minute, we can see that the wicks, the wick on this bullish candle and the wick on this bullish candle will make up that base on the 15 minute time frame. So that's just sort of indicating to you guys how bases can look different on different time frames as well. So we have our potential 5 minute base or 15 minute point of interest, 15 minute base, however you want to look at it. It's that purple zone here. And what we're going to be doing now is mapping out, the market structure and the trend as it approaches this zone. Basically, what we want to see is if the price actually respects this zone as a level of support, and if we can get a bullish movement away from this zone, and seeing if we can catch any good buy entries following. So just playing the replay mode on, we can see the market, there was a high, a low, and then we can see that as we continue price on, creates a lower high over here to continue and make lower lows into the zone right there. Now there are these other smaller fractal lower highs and lower lows in between, like here and here and here, and all these other little ones like here and here. But the major ones that were of interest to me, in my opinion, were these ones that I've marked out with these little red circles. And on the 5 minute time frame, we can see that as it approaches that original demand zone which we had mapped out, we can actually see that it's given a very, very strong reaction away from the zone. Now, for this reaction to be valid, for this reaction to be, to be taken seriously, to place buys upon this, we need to see it break market structure. And the significant structural point that we need to see broken is the last significant lower high in this fractal downtrend. So the one that we need to be looking for is this one. This one needs to be broken in order for, a break of structure to be valid, and we can look for retracements to be getting in afterwards. So as we forward the price, you can see the price did actually come into the original demand zone again down in here, and then it eventually goes on to break the structure right there. So here we can see after this candle was printed, the market structure was broken. As we can see, the body of this candle closed above the bodies of these candles, indicating a break of structure to the upside. Now we have the bullish break of structure. What we need to see then is, we need to establish where our POIs are going to be. And for me personally, all the POIs were based on this 15 minute time frame. Now the first POI that I wanted to see if we got respected was this lower one down in here. We can see there's a buildup of liquidity, a buildup of these equal lows down in here. You can see that this 15-minute bearish candle, it takes out the lows, and what is it followed by? A big bullish move upwards that goes on to break the structure. So this actually marks out the one of the first POIs that I was looking at. So here we have the 15-minute institutional candle POI, and the next point of interest which I was looking at was this 15-minute base. Here we can see the rally base in this little candle here, and then the rally upwards that took out this area of structure. So this base here, we can see, on the 15-minute, it looks like just a simple, this 3 candlestick pattern creating the rally base rally formation. However, if we go down onto the 5-minute, we can see that the 15-minute base is actually made up of all of this reaccumulation of price in here. So that's how the bases will look like on these different time frames, like I stated earlier. So we have here the 15-minute base POI. So now we have established our points of interest for these buy scenarios. We have a bullish break of structure after touching a demand zone, which is what we wanted to see. So now what we're going to be looking for is a reaction into either this zone in here or this zone down in here. Now once we see the reaction into these potential demand zones, we're going to be waiting to see if we can get our entries in. So going down into the 1 minute, so we can see in a lot of detail how these come into our points of interest. Now, when analyzing this live, it's a lot easier to have stuff like alerts on your trading view. So one thing that I definitely recommend is actually going for the paid subscription of TradingView, because it allows you to have these alerts, and it takes a lot of stress off you, checking the charts, every half an hour, or whatever it may be. So setting an alert at this point here, you see add alert for US30. Or I'm in replay mode, so I can't really create the alerts right now, but you'd be setting your alerts around this point here as it approaches this first POI, and another one down in here for the lower POI if it does decide to give that deeper retracement. So as we forward the price and see how it reacts into the zones, so there we have a really good reaction that went on to create a further higher high in this uptrend. So this went to create a further higher high in the uptrend after coming into this 15-minute base POI. Now, what that means is, it proves to us that the evidence that this demand was valid, because it went on to create further higher highs. Now that we know that this demand is valid and it's given us a nice 1 minute institutional candle, this last sell before buy candle, it was followed by a fair amount of imbalance in this candle here as well, which is a good sign to see. So we can base entries off of the open of the candle right in there. And as we press play, we can see how it approaches our first entry zone. Now, at this point here, we've not totally ruled out this bottom zone. There is a fair amount of imbalance in this zone here. This is still a valid POI at this point. Price could most definitely still come straight through here, give a deeper retracement, and then fly off. But we would definitely want to be placing one entry here because we have been given proof of this demand being valid. So as we press play and see how price approaches our entry, right here, and you can see there we get our entry over here, and we can see price moves away from our zone very positively indeed. And as we come closer to that 2:30 p.m. where we know US30 experiences a lot of volatility, we can see how it gets and how it reacts to that 2:30 p.m. stock market open. So coming up to 2:30, and here we go, we see the bullish reaction, and that 2:30 p.m. volatility actually drives our trade further into profit. Now, establishing where to take profit on this, from what we can see from the 2:30 p.m. volatility, so we have this positive bullish movement up, and the 2:30 p.m. movement gives us this bullish movement up here. Now, what it also does, it creates a further demand zone within here, this 1 minute base within this demand zone. And what we can see in here, we can see a very clear rally, this little base rally formation that takes out this this previous high. So it continues the bullish movement. So we had a potential demand zone in here. And what I wanted to see is if we can get price to come up for that 2:30 p.m. movement, and I want to see if price does get respected, if this demand zone does get respected here. I want to see if we can get price to move away from this zone positively. And as we follow the price, we can see it comes into the demand and it carries on going up. Now that I know that this demand zone is being respected, I can anticipate there's going to be a measured move to the upside of an equal length of this impulsive move here. So the size of this impulse here, just make it more accurate, so the size of this impulse here, I'm expecting to see an equal or higher size impulse to the upside. So as we play price, we can see that it actually is very, very, fairly accurate. As we can see, it comes up and makes that similar size measured move to the upside. But now looking at the 5 minute time frame and seeing, we've had that measured move, we should be looking at taking a lot of profits off up here. At this point, I had no idea whether it was going to carry on continuing, or maybe we'd see, some bearish price action to fill in these lower imbalances in here. So as we forward the price a bit more, what we can start to see is going down onto the 1 minute time frame now. As we see this movement down, the obvious demand zone in this area that should be respected was actually, it kind of got clapped. It kind of went lower than expected. It didn't exactly break this POI down here, didn't go below it, it didn't close below it, but it went very deep into it. So, there was a chance of having, this mitigation up here, of this high, low, it's creating a lower high, and what does it go on to do? It creates a further lower low in here, a structural lower low. You can see the body of these candles actually closes below the body of this candle, even though, the wick, it doesn't go below the wick over here. So basing my TP off the 5 minute time frame, what we can see on the 5 minute time frame in this movement down that confirmed that we may be bearish from there on, we can see there's a 5 minute buy to sell candle. So having my TP, we're basically having my TP at the open of that 5 minute candle right there, giving us that final risk to reward ratio of 1 to 39. So that was the final trade there. As we can see, it was a very good decision to take our profits up in this area, because we can see that price actually came back down to our original entry. So there we have the full breakdown of that 1 to 39 buy scenario on US30. I hope you guys will take value and learn from this video, and if you did, please do like, share and subscribe, and drop in the comments anything that you'd like to see in future videos. Thank you for watching, and I'll see you guys in the next video for more of that trading source.